So welcome to the module 3. This is entitled Different Kinds of Risk Management. So let's be honest, starting, owning, and running a business is inherently risky. Creating the right system is what helps you manage the risk. And risk management is incredibly important, sabi ni Tom Corson Knowles. So this unit gives an overview about the basics of risks, riskless securities, and the connection of risk and time horizons. Also, this unit will allow the students to know more about the different kinds of risk management. Likewise, this will also introduce students to some examples of riskless investments and securities. So these are the learning outcomes or learning objectives for Module 3. Discuss the differences between the kinds of risk management. Summarize the significance or relevance of various kinds of risk management. So everyone is exposed to some type of risk every day, whether it's from driving, walking down the street, investing, capital planning, or something else. An investor's personality, lifestyle, and age are some of the top factors to consider for individual investment management and risk purposes. So each investor has a unique risk profile that determines their willingness and ability to withstand risk. In general, as investment risks rise, investors expect higher returns to compensate for taking those risks. Sabi nga, the higher the risk, the higher the return. Individuals, financial advisors, and companies can all develop risk management strategies to help manage risks associated with their investments and business activities. Academically, there are several theories, metrics, and strategies that have been identified to measure, analyze, and manage risk. And some of these include standard deviation, beta, value at risk, and the capital asset pricing model. Measuring and quantifying risk often allows investors, traders, and business managers to hedge some risk away by using various strategies including diversification and derivative position. Let's discuss the riskless securities. While it is true that no investment is fully free of all possible risks, certain securities have so little practical risk that they are considered risk-free or riskless. Riskless securities often form a baseline for analyzing and measuring risk. These types of investments offer an expected rate of return with very little or no risk. Oftentimes, all types of investors will look to these securities for preserving emergency savings or for holding assets that need to be immediately accessible. Examples of riskless investments and securities include certificates of deposits or CDs, government money market accounts, and U.S. Treasury bills. The 30-day U.S. Treasury bill is generally viewed as the baseline risk-free security for financial modeling. It is backed by the full faith and credit of the U.S. government, and given its relatively short maturity date, has a minimal interest rate exposure. Next is the risk and time horizons. Time horizon and liquidity of investments is often a key factor influencing risk assessment and risk management. If an investor needs funds to be immediately accessible, they are less likely to invest in high risk investments or investments that cannot be immediately liquidated and more likely to place their money in riskless securities. Time horizons will also be an important factor for individual investment portfolios. Younger investors with longer time horizons to retirement may be willing to invest in higher risk investments with higher potential returns. Older investors would have a different risk tolerance since they will need funds to be more readily available. Let's discuss now the different kinds of risk management. First is the interest rate risk. It is the risk of adverse effect of interest rate movements on a firm's profit or balance sheet. Next is the credit risk. It is the risk which may arise due to default of the counterparty. Alam nyo naman, pag sinabing credit is, it's a liability. Next is the liquidity risk. It is the risk which arises if the given asset or fund is not traded at the right time in the market. Fourth is the internal business risk. It is due to the inefficiency of management in the business. So kapag may mga inefficiency within the business, nagkakaroon ng internal business risk. Next is the external business risk. This type of risk arises due to external environment in the business. Ito yung mga uncontrollable kasi external siya. Next is the financial risk. This risk originates due to improper composition of the operations. 7. Market risk. This is the risk which occurs due to market conditions which results in reduction in returns expected on investment. It is also referred to as price risk. Next is the hindi siya na-include basis risk. This risk is due to the price of the asset and the hedge instrument that are not perfectly correlated. Next is the volatility risk of suffering losses from changes in implied volatility of the market. Next is the personnel risk. This is the risk. This risk is the one which may occur due to inefficient or incapable personnel in the business. Next is the country or sovereign risk. When a country is in difficulty in terms of making its financial commitments for that country as well as for other countries, then this type of risk is country or sovereign risk. Next is the technology risk, type of risk which arises due to failure in technology. Next is the operational risk. This risk is due to any type of operational failure like inadequate monitoring, systems failure, management failure, human error. And this also includes model risk, people risk, legal and compliance risk. Next is the foreign exchange risk. It is due to the changes in the foreign exchange rate, currency values, etc., which affects the firm. And that's the end of our discussion for Module 3. Anyway, yung mga definitions naman, especially the kinds of risk management, it can be seen in the module. I have also included references kung may mga gusto kayong basahin further. And reminder again to answer the activities and assessments at the end of the module. And if you have any questions, feel free to send a message in our GC or MS Teams. Thank you.